If even a giant brand like Coca-Cola is forced to relocate, the question arises, why should others stay? This could put the US economy at serious risk of a brain drain and capital flight. Of course, this scenario may seem exaggerated. After all, the US is still a large consumer market with advanced infrastructure and a financial center. However, even the thought that Coca-Cola might leave is a source of concern in itself. According to reports from the company, Coca-Cola is planning to move to a country with a strong logistics infrastructure, political stability, and multiple trade agreements. European countries such as Germany, the Netherlands, and Switzerland are frequently mentioned. Some investment analysts comment that centers such as Ireland and Singapore, which have lower taxes and flexible labor restrictions, may also be preferred. However, the company may be targeting a location with a large population and a strong domestic market. The chosen location will facilitate trade with the EU or other regional countries while creating new procedures for its commercial relations with the US. Innovations tailored to the taste preferences of consumers in nearby regions could also be developed. For example, regulations on sugar and artificial sweeteners are stricter in Europe, which could push Coca-Cola toward formulas with less sugar. If it moves to Asia, plant-based beverages and local flavors like green tea extracts could take center stage. American consumers may have to pay more for Coca-Cola and perhaps have fewer options. Tariffs impose additional costs on products not manufactured in the US. If the company produces abroad and ships to the US, new taxes and increased shipping costs will drive up shelf prices. The picture is bleaker for workers. Thousands of blue-collar workers at Coca-Cola's US factories face the threat of jobs moving overseas. While state governments and unions may say, let's keep the company here and support it with tax incentives, if the business environment isn't attractive enough to convince the company, Coca-Cola's departure may be unstoppable. It remains unclear whether there is a sufficiently strong alternative manufacturing sector to compensate for the lost jobs. On the other hand, rival brands like Pepsi could try to win over local consumers by saying, we're not considering such a radical move. Even local boutique soda brands could appeal to nationalist consumers by declaring, we're American. The balance in the cola market could shift in this way. The country Coca-Cola chooses for its new headquarters will not only offer tax advantages, but also differentiate itself through environmental and labor regulations.